Hello, everyone. Welcome to this webinar brought to you by Bursa Malaysia and managed by Live Champ. My name is May, and I will be your moderator for today's session. Our title for today's webinar is Setting Stop Loss and Taking Profit Orders, Protecting Your Capital. Now, every trader knows that the thrill of watching their investment grows. But what about those moments when the market takes an unexpected turn? Protecting your capital is just as important as growing it, and having a clear strategy in place can make all the difference. Now, one of the most common dilemmas traders face is knowing when to take their profits or cut their losses. It's a very delicate balance. Now, usually traders will hold on for too long, and you might watch your gains disappear or exit too soon, and you could miss out on further upsides. So, how do you set boundaries that safeguard your investments while allowing room for growth? How do you make a confident, data-driven decision instead of letting emotions take over? So today we are honored to have Miss Pauline Yong to share with you on how to effectively use these essential order types to manage your risk and make smarter decisions to safeguard your investments and maximize your potential returns. Right, so before we begin, I would like to let you guys know of a short disclaimer. Please be reminded that everything shared in today's session is purely for educational purposes, and there is no way and by no way that we are providing you any sort of advice to buy or sell any securities. You will be 100% liable if you make any type of investments. Okay, before we move on to Miss Pauline, let me give a short introduction to our esteemed speaker. She is the CEO of Sigma Wealth Sdn Bhd. She is a licensed financial planner, certified by Malaysian Securities Commission Financial Planner Representative License, CMSRL, and Bank Negara Financial Advisor Representative License, FAR. She is a course trainer and a public speaker at Financial Planning Associate Malaysia, FPAM, and Bursa Malaysia. And with over 25 years of experience in education, she has accumulated over 50,000 students and conducted over 200 large-scale corporate courses. Now, Miss Pauline is also a best-selling author who has published 6 books on investments and financial planning, one of them being I Love Stocks and I Love Trading. Her articles have appeared in financial magazines such as The Personal Money, Money Compass, and many more. Now, with that said, please give a warm welcome to Miss Pauline.
Hello, thank you, May. Hello, good morning.
Hi,
Good
good
morning,
morning.
everyone. Welcome to today's webinar. Okay, so without further ado, let me continue with my slides. Okay, I will share my slides now. Just a minute. Okay. May, can you help me to stop sharing so that I can share from here?
Sure, sure.
Okay, thanks. Okay. Okay, so I'm sharing my slides now. Setting stop loss and take profit orders, protecting your capital. So this is today's topic where we are going to look at how we can learn how to place a certain limit order or market order, and then how we can do a stop loss. Okay. Okay. So before I start, right? Hello everybody. Before I start, I want to see how many of you have already trading. Okay, you are already trading in the market, either it's a stock market or in the futures market or any financial markets. Okay, anybody here is already trading? If you are already trading, you may type yes, or you may raise your hand. Okay, yeah. Okay, so I see that some of you are already trading. Okay, so for those of you who are already trading, right, do you put a stop loss or you do a manual stop loss? So you can either do a auto stop loss or you can do a manual stop loss, meaning that after you clean the order, then only you manually stop loss. Okay, so anybody do manual or auto? Okay, so I see that some of you do not have trading background. And then many, some say manual, some say auto. Okay, manual, a lot say manual. Now I can understand why so many manual is because some of the trading platform, I know that we have about more than 10 providers, like a broker account in Malaysia. Not all the providers, they have auto trading mechanism. Okay, so some that do not have, then you have to do a manual stop loss. But whether it is auto or manual, right, the concept is the same. So today I'm going to go through the strategies for how to place a stop loss. Okay, so after you understand the concept, then whether you do it automatically or you do it manually is the same. All right, so let's go. So this is today's objective. So we have quite a lot to cover. So basically, my objective is that I want to show what is the theory behind, and more importantly is the practice, the practical. Okay, so we'll spend about half of the time looking at the real chart and then try to use the today I'm using the tradingview.com, and then you can see to demonstrate how to do the stop loss. All right. Okay. So this is what we're going to do. Look at the definition, the purpose, importance of the risk management, and then to introduce to you what are the orders. Okay, you have the stop loss order, take profit orders, and then we demonstrate it. Okay. So risk management. When it comes to the risk management, the word risk, it means that there is some form of losing money. Okay, so as long as you feel there is some form of a risk, you feel fearful. Okay, you feel fearful is because you are scared of losing something. For example, you feel risky of taking a flight. Okay, some people they whenever they take a flight, they feel very scared. Okay, because there's a risk there. And then some people, they go to the high mountain. Okay, you climb to the tallest, highest mountain, and then you feel scared. And then when you feel scared, and that's because there's a risk there. Okay, you fear of losing something, losing your life, losing your money, losing whatever. Okay, so in financial management, we also look at investment as a form of risk, because there is a potential that we may lose money. Okay, so whether you are investing in the properties or you are investing in the gold, you are investing in the stocks, you are investing in derivatives or trading or whatever, right? As long as you are putting out your money to invest in something, and then there is a chance that the outcome may be you are ended up making money or you are losing money. So when you're losing money, we call it a risk. And then this risk is that we need to manage it. Okay, so we call risk management. And in this table, so we see that sometimes when you're losing money, for example, you lose 25%. Okay, let's say you started with 100% of the equity. Let's say you started with 10K. Okay, you started with 10K. So if let's say you lose 25%, so you started with 10K, when you lose 25%, you left with 7,500. Okay, so from 10K down to 7,500, and for you to go back to your 10K, you need to gain 33%. Okay, then only you can gain back to 10K. So meaning that you need to be like 2,500. From 7,500 to 10K is 2,500 divided by 7,500. your capital here, and then times 100%, and that will give you 33%. Whereas from here, you lose 2,500 is 2,500 divided by 10K times 100%. So then this will be 25%. Okay, so from 10K down to 5K, you lose 50,000. Okay, you lose 50%. 10K down to 5K, you lose half of it. But in order for you from 5K to 10K, you need to make 100%. The percentage is 100% because now you need 5K divided by 5K times 100. So then that will be 100%. So you see, when you lost money, it's 50% off. But when you want to, from that 50% off, you want to make up back to your original equity value, you will have to work extra hard, 100%. You need to gain 100%, then only you can go back to 10K. So what does this table show you? It shows you whenever you are losing money below your equity, okay, whenever you are losing money below your equity, so it will take extra effort for you to go back up to recover what you have lost. Okay, so when you're looking at this table, right, meaning that for any portfolio manager or any investors or any fund manager, they will never want to see this to happen below your equity value. Okay, so they want, this is what we call a drawdown. Okay, so they will never want to see a drawdown, especially when you have a big drawdown. Then you will feel that you have to work extra hard to go back to your original position. Okay, so then what is your risk? How much money you are willing to lose per trade? So in theory, okay, there's a theory and then there's a practice. So in theory, normally we say, okay, 1 to 3%. But in practice, some people may say, okay, 10%. Okay, it depends on what is your capital. If let's say your capital is a smaller capital, like I only have 1,000. So if you only have 1,000 and then you said each trade I want to put 200. So that means that you are risking 20% of your capital. In each of the trade, you are risking 20%. Okay, per trade. Okay, so meaning that this willing to lose per trade, it depends on what is your capital as well. So in theory, the best is that it has to be 1 to 3%. The reason is because whenever you have a larger capital, like 10K, okay, let's say you have a larger capital like 10K, and then that 200 ringgit will be 2%. Okay, so this 200 is equivalent to 2%. So if let's say you have 10K and then you feel that this 200 is not much, okay, so it's the psychology. To me, I feel that a lot of time when you are trading, right, it is the psychology. So when you are putting, if you have 20% means that, oh, if I have 10K, I put up with 2K. So that's 20%. If I have 10K, I put up 200 ringgit. So that's 2%. So the psychology is that, oh, this 200 is nothing. It's very small. So you don't feel pain. You don't feel painful when you cut loss. And this is very important. A lot of time it is the feeling of pain. Okay, the feel of pain. It is normally this the feeling of pain that make you emotional. So once you are emotional, can you think logically? When you are emotional, can you think logically? Yes or no? Okay, when you're emotional, you think logical or not? Okay, when you are logical, it means what? You do not have any emotion. So number one, pain is an emotion, okay? And number two, happy is also an emotion. And number 3, angry is also an emotion. Fearful. So all these are emotions. So if you are trading, is it advisable for you to have all these kind of emotion in it? Yes or no? Can you have all this emotion in it? Chin On say yes. Okay. Normally, in theory, right? In theory, we are not supposed to bring in our emotion in trading. Not supposed to. Okay, we are not supposed to, because when you are trading, your mind has to become like a robot. How do you feel when it is a robotic brain? A robotic brain is when everything is based on rules. Okay, rule based. So meaning that when you are trading, everything is rules. So meaning that, okay, I want to enter when the candlestick go above the previous candlestick. So I will enter. And then I will take profit when it go above 25 ticks. And then I will stop loss when there is 10 or 7 ticks of negative, then I will stop loss. So that means everything is numbers and the rules in your brain. So when you are trading, you just have to follow the rules. You follow the rules, and then there is no emotion involved. So the minute you have the emotion, then you will feel that, okay, supposed to cut loss, you did not cut loss. Supposed to take profit, you did not take profit. So meaning that you are not following your rules because you are emotional. Okay, so that is the very first lesson when you are stepping into a trading room. So when you're stepping into a trading room, you have to condition yourself. Okay, like if you are a sports person, okay, sportsman or sportswoman, before you enter a competition, a lot of time you need to precondition yourself first. You have to go through your mind over and over again what you should do later. So later I should be on the start, I have to do this, I have to do that, and then I have to do this, I have to follow all these things, and then I will, I will proceed in this competition. So same thing, when you are having a trade in your trading room, you must have a proper trading desk. Okay, you must have a proper table, and then with the computer and everything, then you are setting your mind in a trading mode. So once you are in a trading mode, then you'll be following your rules. Okay, and that also depends on whether you are a short-term traders, you are scalpers, you are day trader, or you are a swing trader. Okay, there's a difference as well. So if let's say you are a day trader, then you will be looking at the screen throughout the day. If let's say you are the scalper, then the more you have to stay onto the screen, and then you have to basically keep moving your mouse and then to make sure that you are trading. Okay, so that is for day trader. But if you are a swing trader, then maybe you can stay away from the computer for maybe 1 or 2 days, and then you come back because you are a swing trader. Okay, so it depends what kind of traders you are, and then your strategies is also different. Okay, so then as long as you know what is your personality, then you set the strategies that suits your personality. Okay, so that is the most important. You have to understand your personality first, and then to decide what kind of traders you are, then you design the strategies that suits your style. Okay, then your risk 1 to 3% also depending on your risk preference as well. Okay, textbook is textbook, but then your risk preference is also important. Okay, so this is 1 to 3% is your ideally would be your risk. Okay, so if let's say 1,000, 1% will be 100, 2% will be 200, 3% will be 300. Okay, so how do you calculate your risk? So you are willing to risk 3% of your original capital. Okay, so this is just for example. So let's say you have 20,000. So that 3% of this 20,000 will be 600. Okay, so then with this 600, it means that this is the amount of money you are willing to cut loss. you are willing to lose. Okay, so this 600 ringgit, you cut loss, you don't feel the pain. Okay, no pain. So this is very, very important. You don't just follow the rules, you follow your pain. Okay, what I mean you follow your pain is that we know that the theory is 1 to 3%, but then what is this? If the 1 to 3% you still feel painful, then this is not something that you are able to accept. As long as you feel painful, you won't be cutting loss. You won't. Okay, so the trick here is that you do not feel the pain. So what is the amount that you do not feel the pain? So if let's say some people, maybe they have a larger capital, they feel that, oh, 1,000 ringgit to me is like nothing. Okay, I don't feel the pain. So then this 1,000 ringgit will be your risk, will be your stop loss. Okay, so will be the amount of money that you're willing to let go. Okay, if you lose 1,000, let go. Okay, so that is cut loss. So if let's say your pain level is very low, then you have to set as a very low stop loss, which is 200, 300. Okay, so this is one level whereby you see from the perspective of your emotion, okay, of your pain. Later, I will also let you know that the other perspective of stopping loss is based on your chart, and then you see whether it is the support. If it's below the support, you need to sell. Okay, so those are the two ways of looking at your stop loss. Okay, so one is your emotion, the other one is the actual support and resistance. Okay, so this two things, when you combine together, then only you can trade well. Okay, otherwise you have one, you don't have the other, also you cannot. Okay, so let's do one numerical example here. So let's say we want to calculate our position sizing. Okay, so position sizing is a model, simply tells you how much or how big a position to take. Okay, so it's also equal to the number of shares. So that means that, okay, I want to trade, but then you do not know how much of a position sizing you need to take. So you do not know how many number of shares you need to buy. So therefore, there is one calculation whereby you take the amount of risk divided by your stop loss. Say, for example, you have this MBB shares. This MBB shares is 7 ringgit and 50 cents now. Okay, so and then your amount of risk just now we calculated is 600 ringgit. Okay, you start with 20,000, your capital, and then you multiply 3%. 3% of 20K is 600. So then this is your risk based on the amount. Then you look at the chart. Okay, you look at this chart, and then the support here is 7. Okay, the support here is 7, and then now you buy at 750. Okay, so you buy at 750, and then you see the support is 7. So then you say, okay, if the share price were to go below 7, then I will have to cut loss. Okay, so then your cut loss level is 50 cents, because if below 7, then you need to cut loss. So therefore, your stop loss here is 50 cents stop loss. Okay, so then my stop loss is 50 cents. Okay, so can I see a hand if everybody is following? Okay, anybody is not following, you have to let me know. Okay, do you understand this part? 7 is my stop loss, is my support. So if anything below my support, I need to cut loss. All right, so then I enter at 750, and then I cut loss at 7. So then my loss here is 50 cents, potential loss lah. Okay, potential loss is 50 cents. So then I calculate my position sizing based on 600 amount of risk, 600 divided by my stop loss. So 600 divided by 50 cents is equal to 1,200 shares. So then I have to buy these MBB shares for 7.5 times 1,200 shares. And then that will be my position, my amount of capital that I need to invest for the first trade. Okay. So this 1,200 will be my position sizing. Okay. Next, risk to reward. Or you can call it reward to risk or risk to reward is the same. Okay, so it's a ratio. So when we're looking at the risk to reward ratio, it's used by traders to manage, okay, to manage their capital and their risk of loss during trading. So the ratio is to assess the expected return and your risk. Okay, so for any given of a trade, you need to see what is your expected return and then what is your expected risk. Now, a lot of time when people are investing or you are trading, right, you do not think about the negative side. You only think about the positive. So you buy is because you think that you can make so and so much money. That's the reason why you want to buy. Okay, but you never think of, oh, I buy is because that I may lose money. Okay, nobody will think that you buy it because you may lose money. Nobody. Okay, but everybody will think that, okay, I buy is because I want to make more money. Now for trading, if you are investing, buy and hold, of course, you may not need to cut loss. You just buy and hold, and then when the price is down, you just have to lower cost. So that is for investing. Okay, so today I'm focusing on trading. Okay, so because we are looking at the stop loss, so only when you are trading, you need to have this mechanism. Okay, when you're in the mode of investing, basically you just buy in deep, and then lower cost averaging. So that is the strategies for investing. So when you are trading, right, you do not mix these two, right? So you have the trading mindset. So whenever you are trading, you have to switch your mind completely different from the investing mode, whereby when you are trading, you need to think of how much money I may lose first. Okay, so the amount of money that you lose will come first. This one will come first. Okay, not how much money you make, how much money you will lose, this one come first. Okay, then only you see that you look at the chart and then you see whether it fit into your loss or not. Okay, so what I mean is that, okay, because you are entering into a position, okay, you are entering into position, and then you are trying to make 3-to-1 reward to risk ratio. 3-to-1 means that the gain here, okay, the reward here, the price that you need to sell, selling price, and the stop loss that you have here is 3:1. Okay, let's say you are looking at here is 50 cents of a cut loss. All right, so it's 7. Can anybody tell me what will be this figure? So let's say this is 50 cents of a risk here. So can anybody tell me what is this figure? This figure here. How much you will need to sell? Anybody? If I say my stop loss is 7 ringgit, and then what will be my, yes, okay, my profit target here is 9. Okay. How do you get the 9? It is because your stop loss here is 50 cents. And then your profit target here has to be 1.5. Okay, and that 1.5 is because it is 3 times the risk here. So your reward is 1.5, and then your risk is 50 cents. So then your reward to risk is 3 times. Okay, so do everybody understand here? Do you know how I got this 3 times of a reward to risk? You need to understand so that later when we are doing the demo, you can follow. Okay, so if here you cannot follow, then later when we do the demo, you won't be able to follow. Okay, so do I see that everybody following this one? Okay, so meaning that I enter at 750. Then I look at my chart and I see that, okay, my neckline, the double top neckline is 7. So then I have a 50 cents here. So then my reward is 150. Okay. Now, what is the strategy here is that just now I said that you must combine your pain combine with the chart. Okay. You must have this pain combined with the chart. So this pain is your risk, which is your loss. Okay. So your potential loss is 600 ringgit. Okay. So your potential loss is 600 ringgit. So then that will be your pain. So therefore, you need to find a trade that is fit into this criteria. So if let's say you see that this chart here, and then whereby the stop loss here is so happen that the stop loss level fit into your risk, which is below 600. Okay, it has to be not more than 600, but below 600. So if let's say it is 500 away, your stop loss is actually, the support is actually 500 ringgit away, then you look at your risk profile and it fit because you say that your risk is 600 and the stop loss is actually 500 ringgit away. So then you see that, okay, this one I may be able to trade. And then you look at the reward. The reward is that somewhere here there is a 20-day or 200-day MA line, moving average line. Okay, this is the MA line, 200-day MA line above it. And this 200-day MA line still happens to be at 9 ringgit also. Okay, so the 200 MA line is also 9 ringgit. And then your stop loss here, your neckline is 7 ringgit. Okay, so then you say that, wow, this one fit very well. So therefore, this is a good trade. It fit into my personality and then it also fit into my risk profile. So therefore, I can enter a trade here. Okay, I enter a trade at 750 and then I'm ready to cut loss at 7 ringgit and then I may want to take profit at 9 ringgit. Okay, so meaning that my reward to risk is 3 to 1. Now, sometimes your resistance, your profit target, which is your resistance, okay, your resistance can be below 9. Okay, so it can be 850. Okay, so if it's 850, that means that your reward to risk will be 1 over 50, 0.5, and then equal to 2. Okay, so can anybody tell me, okay, there's no right or wrong. This reward to risk is purely your, according to your risk preference, right? Can anybody tell me who may want to go in at 2 reward to risk ratio? Who here in the audience here you may want to go in also sometimes? Anybody? Anybody, you may want to go in at 2 to 1 reward to risk. There's no right or wrong. Okay, and it depends on your risk profile and the situation, right? Anybody, you will enter here or not with a 2 to 1 reward to risk? Anybody? Yes. Okay, basically for me also, yes. All right. Honestly, to be honest, 2 to 1, or sometimes I also enter. Okay, so it doesn't matter. You don't have to follow the textbook. Okay, the point here is that you have the textbook, the theory, but you really do not have to follow. You follow according to your rules. Your rules say that as long as it for some people, you may set the reward to risk as 2 times. As long as it is above 2 times, you may want to enter. Okay, you don't have to find the perfect 3 times. You don't have to. Okay, to you, you think that it's reasonable for you, you just enter. So, okay. So then this is the reward to risk. Later, when we look at the demo, I will illustrate further. Then we look at the order type. The order type, we have the market order, we have the limit order, we have the stop order. Many of our trading platform, whether you are there are so many trading platform, okay? I don't have to name the names. You know what are the trading platform. And many of these trading platforms, they will have the market order and the limit order, okay? But they do not have the stop order, okay? But some trading platform, they will have these 3 orders together. So then if you have the stop order, then it will be easier for you. Then you can just key in the contingency stop order. Then you can auto stop, okay? Auto stop loss. No need to monitor. Otherwise, you need to monitor. Okay. So what is this order? So market order is the instant buy, instant sell. So say for example, you have the bid, and then you have the ask. Okay. So let's say you want to buy this MBB share. So currently the bid price is 750. And then the ask price is 7.55. Let's say, okay, for example. So what is a bid price? A bid price means what? Can anybody tell me what does a bid price means? What does a bid price means? Means what? People want to sell, okay? Well, people want to sell to here, but then this is actually you are trying to buy. The buyer will queue at this price, the buyer. The buyer will be queuing at this price, and then the seller will be queuing at this place here. So if let's say you are the buyer for MBB, you'll be queuing here. Okay, you will be queuing here. And then if you are the seller, people want to queue at here. All right, so then you have the bid and the ask. So if you are the buyer, isn't it you want to key in as low as possible because you want to buy cheaper, right? So you want to buy as low as possible. So therefore, the buyer price is always lower than the seller's price. If you are the seller, you want to key in as high as possible. So your asking price is always higher than the buyer price. Okay, so let's say you are very, very eager to buy. Okay, let's say you really say, okay, I must buy now. I want an immediate order. So can anybody tell me, given this situation, right, what will be the transacted immediate order, market order? Okay, so if you really, really want to buy immediately, then you have to key in a market order. Very good. Okay, yes, so correct. So if let's say you really, really want to buy now immediately, then you have to key in the market order. So if you key in the market order, then it will be immediately done at what price? At the highest at this asking price. Higher of this price, that there are 2 price, right? The higher of these 2 price will be the asking price. It will be done immediately at this price. However, if you say that, okay, I have the time, there's no hurry for me to buy. So as long as I buy, whether today or tomorrow, doesn't matter. So if your mentality is like that, then you say, okay, I want to buy a limit order. So this limit order is that I want to key in a what price? If you just say that I want to buy a limit order, you just say, okay, I just want to buy at 750. So if I get it, I get it. If I don't get it, it's fine. So then you have to key in the limit order at 750. So if you are queuing at 750, you are queuing together with a bunch of the queuer. I mean, the people who are in the line, so they're just queue accordingly. So you just queue accordingly. So then it will be first come, first serve. So whoever in front of you, if let's say the price hits 750, they will go first. Okay, so and then when it come to you, then you will hit also if let's say the price remain at 750. Okay, unless what? Unless the price pick off and then it go from 751 to 752, 53, 54, and then it never come down to 750. So at the end of the day, at 5 p.m., If you still do not get what you want, then this order will be expired. Finish, you don't get to buy. Okay, so then the next day you queue again at 7:50. You queue until you got it. Okay, so then this is called the limit order. So you must have that. Whether it is a short or it is a long, okay, whether it is a sell or it is a buy, you can key in both of these, either a market order or a limit order. Okay, even if you want to sell after you bought at 7:50 and they say, okay, I want to sell exactly at 8. Nothing more, nothing less, must be 8. Then you have to key in a sell limit order at 8. Okay, so everybody understand the order? Okay, so now next is the stop order. So this stop order is for you to stop loss. Okay, so you have two positions, let's say. You can either long means buy low, sell high, or you can short. Okay, short means that you sell high first and then you buy back later. Now, for many investors, they are very familiar with buy low, sell high. Okay, buy low, and then you want to sell high. Okay, so you are very familiar with this. But not many people are familiar with selling first. You short now and then you buy back later. Not many people are familiar. Okay, but anyway, I explained the theory behind first, then I will let you see a real chart. So when you are looking at your price is 8. Okay, and then you just want to buy at 7:50. So if let's say the price is at 8, you think that it's too high, so then you key in a buy limit order. You buy limit order at 7:50, and then you wait and wait and wait for the price to go down. Okay, so the price go down. And finally, it reached the 7:50. So once it reached the 7:50 and happened, you are in line, the first person in line, then you'll be trigger a buy. So then your order will be executed. Okay, so then it will be you bought at 7:50. Okay, so then this is called a limit buy. For SAM, for Bursa Malaysia, there are some designated shares. Designated shares, only some designated shares are allowed to sell first, then buy back later. Only some designated shares. So there's a list of the designated shares, okay, for Bursa Malaysia. But for Bursa derivatives market, futures, okay, you can definitely sell. You can short anytime, you can long anytime. Okay, so that is the difference between the derivative market and the equity market. Okay, so let's say the price go down and then you trigger. So after you trigger, then you are hoping that the price will go higher, right? However, there is a stock market crash. All right, so if let's say there's a stock market crash, the price did not sustain at the 7:50, but then it break below the 7:50. And then it go down to 7 here. Okay, it go down to 7 here. So therefore, what will happen? Then you will have to stop loss. Okay, if the price didn't go higher and then it crashed and then it had to go down towards the 7, then you need to cut loss. So therefore, you need to key in a sell stop order. So this sell stop order is to place below the current market price when the price is falling. So then you have to key in sell stop, or you can key in stop. There's a button there for you to key in, and then you can select the word with the stop. You can select this one. Okay, stop sell at 7 ringgit. So as long as the price do not reach the 7 ringgit, like it reverses from 7.10, will this trigger? Okay, can I ask you? So if let's say the price reached 7.10, okay, not reaching the 7, okay, and then you put the sell stop at 7, will this trigger? No, okay, it will not trigger. So you already bought at 750 and then you are very happy and then you just wait. But then, however, it go down to 740, 730, 720, 710. Okay, as long as it didn't touch the 7 ringgit, there is no stop loss take place. Okay, so it will continue until it reach 7, then it will stop out. Okay, so then it will be like only when it touch on the 7, then it will stop out. All right, so then this is called sell stop. So then we look at the short. Okay, so short means that you are waiting to sell at a higher price. So let's say you want to sell at 750 here. Okay, and the price now is 7 here. Okay, so now the price is 7 and then you want to short at 750. So you wait for the price to go higher, 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 and then finally sell limit at 750 trigger. Okay, so you manage to get it at 750 short. Okay, sell limit. So after you sell, you are waiting, hoping that the price will go down. Okay, because that is what you want. But however, the price did not go down and then it passed through the 750. Okay, 760, 780, 790. Okay, so 790 here. Okay, so it passed through the 790. So therefore, you need to put a buy stop order because this one you sell first, right? So then you need to buy back and then to close the position. So then this is called a buy stop order. So this buy stop order you can place at 790, and then as long as it reach 790, it will be triggered. Then it will be stop out immediately. So whatever, if it, let's say it went down to 8 ringgit, it went up to 8 ringgit, 850, whatever, it's none of your business already because you already cut loss at 790. Okay. Okay. So now let me show you the real chart. Okay. Now for this, I would recommend this Tradingview. So Tradingview is a free platform. Okay. Of course, you can refer to the Bursa Malaysia for the share price. So for example, today, let me refresh today. Let's take a look at the market summary. Today, we are looking at our KLCI drop 11 point. Okay, so today is a down market. So if it's a down market, would you want to long or you want to short? Okay, you can do both. You can say, oh, since the market is down, so maybe I should long, I should buy low, sell high, right? Maybe I can pick up a stock from here and then I buy those oversold stock from here. So let's take a look at these stocks. Okay, you have Nestle. These are the gainers. These are the losers. Losing a lot of money. FNN, MPI, banks. Okay, these are the gainers. All right, and then the losers. So then you see the market sentiment is bearish today. Okay, so then you go back. Okay, so now let's take a look at Inari. Okay, so Inari is a technology stock. Okay. Inari is a technology stock, and then you see when you are looking at the technology stock here, you see that it has been down for quite some time. And then finally there's a green bar there. So they said, okay, why don't we buy? Okay. Okay. Now for this, there is one paper trading function here. Okay, you just move your chart above with this line, you move your chart above a little bit. You have to register this tradingview.com. Okay, so I can give you this tradingview.com. So you can look at the so you can register with this TradingView. Okay, with any of your Gmail, and then you move up the chart. You click any of the chart. So you click Inari. After you click in the Inari, then only you can move up the chart. So after that, then only you can click the paper trading here. Okay, so I click the paper trading here. Then you see a connect. So I click connect. Okay. So with this connect, I am connected to the paper trading on this platform. I move down a little bit. Then you can see my buy sell here. Okay. So you see just now I say one is a lower price, the other one is a higher price, right? So then you see this is the bid price, this is the offer price. But the bid price here, you see a sell here. And this sell means that if you want to sell direct, immediate order, this will be your transacted price. Okay, if you want to buy direct, immediate order, it will be like this. Okay, but this is the buyer's, this is the seller's price. Okay. So let's say you want to buy, okay? And then you see that in order for you to buy, right? You just click buy. Okay, I click again, buy. Okay. So then this pop-up screen will pop up. Okay. So I have a pop-up screen here. And then under this pop-up screen, I have a market order. I have a limit order. I have a stop order. Okay. So let's say I put a limit order now. Okay, can anybody tell me what price you want to buy? Okay, what price you want to buy? So currently Inari is 1.86. Okay, so this is for this one is a delay of 15 minutes. Okay, so this one delay 15 minutes. So let's say we buy at 1.86. Okay, so then you can key in the price here. Let's say we want to buy a limit order. So now it's 1.86, right? So 1.86, you think that is too high. So I want to buy at 1.85. Okay, so then you key in a limit order and then you just click the buy. Okay, and then if let's say you want to sell, you can click a limit sell order. Okay, you just have to click sell. Okay, then you can click a sell order, limit sell order. Okay, so you can say, okay, I want to sell at 2.00. 2 ringgit. I want to sell at 2 ringgit. So then this is a click a sell. All right. So this is how you do a limit buy and limit sell. If let's say you want to do a market, you can click the market and then it will be done immediately. So the market order will be done by, if you want to sell, you will be sell at a lower price. If let's say you want to buy, you will be buy at a higher price. Okay. So today you see that the market are down. Okay, so it's a negative sentiment today. Okay, so next, let me explain further, all right? So next, let me explain how do we set profit and the stop loss target. So normally when we want to set the profit target, it can be by percentage or by points. Okay, so for me, I like to go by points. You can also go by your support and resistance, or you can go by your moving average. If let's say you have a 200-day and a 20-day moving average, you can see this line as a support and resistance as well. Okay, and then you can also go for previous high and previous low. All right. Then the stop loss also same thing. So you can go by percentage stop loss. Maybe you want to stop loss at 7%, or you want to stop loss at 7 points. Okay, then you just key in accordingly, or you want to stop loss at the moving average, so then you have to read the moving average line, what is the price, and then you just key in the stop loss level or the support and resistance. Okay, all this let me illustrate to you. All right. So for this example, okay, so this example is a KLCI index. Let's say you want to look at this chart, and then you see that the KLCI index, you enter, all right, you enter at 1540. Okay, so you enter at 1540, and then you want to have a reward to risk 3 to 1. So therefore, you see that your stop loss level is 1483. Okay. sorry, the 7 point. Okay, so let's say you are looking at 1510. Okay, 1590. Sorry, you enter at 1490 here. Okay, you enter at 1490 here, and then you set a stop loss at 7 points away. Okay, so then your stop loss will be 1483 here, and you set your target profit at 20 points, so that will be 1510. Okay, so then that will be your enter here. Okay, 1490 will be here. You enter at this 1490. Okay, you enter at this 1490, and then your stop loss will be 1483. Okay, so 1483 here, somewhere around here. And then your stop profit target will be 1510. So 1510 will be here. Okay, so then your reward to risk is about 3 to 1. Okay, so here is 3 times the risk here. So your reward is 3 times here. Okay, so another example is that you may want to put your profit target at the resistance level, and this resistance level will be your 200-day MA line. So this 200-day MA line will be your profit target. Okay, so then you can say that, okay, I enter here, then I will sell below here, slightly below here. Then if let's say your profit target is here, then you have to calculate. So here is about how many points. So then for your stop loss is somewhere around here. Okay, so the minute it go through here, you have to sell. Okay, another one, support and resistance. So here you can see that the support is the top here. So how do you see the support? The supports are normally you can see a lot of swing high, swing low. So the minute you see swing high, swing low, these are the resistance, and then these are the support. Okay, so these are the resistance and support, and then you can also see the 20 and the 200 MA line. So the MA lines are also the support and resistance. So in this case, here is also a support here. Okay, so if you are looking at this, you have a further away resistance and further away support, and then you have a closer support here. Okay, looking at this, right? Can anybody tell me, okay, for this, you have a support here, all right? And then you have a resistance, all right? So can anybody tell me, let's say you want to enter, where will be the best point to enter? Okay, so at this price, it is 1.74. Okay, so this is Tome. Tome is a gold shares. So 1.74 currently, and then there is a 20 MA line here. This 20 MA line is about 1.73. Okay, this MA line is about 1.73, and then you have a 1.70 here. So can anybody tell me what price would you want to enter now? I mean, enter for this one. Where will be your stop loss? Okay, anybody? You see, my support is here, 1.7. Okay, 1.7. And then my current price is 1.74. Okay, so can anybody tell me what price I will put as an entry price, and then what price will be a stop loss? So after you calculate the stop loss, then only you can look at the profit target. Okay, so you always look at the loss first. So where will be the entry price? Anybody? You want to enter at what price? Okay, so the support is, there are two support. One is a 20 MA line, one is a 200 MA line. Would you want to enter at the 20 or the 200? You want to enter 20 or 200, or you want to enter now? Okay, so David says that you want to enter at the 200. So if let's say you are really entering at the 200, then you have to put a limit order, because now the market order is 1.74. Okay, so if you are looking at 1.74, you want to enter at 1.71. Okay, so this is 1.71. I may think that it will have to take some time. Because if let's say this is the last done and then you are looking at 1.71 as your limit order, it may take some time. Okay, so then you may say that, okay, I don't want to wait. Okay, let's say I don't want to wait. Then I say, okay, I want to key in now. So then it will be a market order and then it will be entered at 1.74. Okay, let's say we enter at 1.74. Okay, let's say you enter at 1.74. Where will be your stop loss? What price? What price will be your stop loss? Okay, I have 1.70 here, and then I have 1.69. Okay. 1.70, yes. Because this 1.70 is slightly below the 200 MA line. Can you see? This 1.70, right, is slightly below the 200 MA line. So therefore, I want to cut loss at, or 1.68 also can, all right? Because sometimes you may overshot a little and then you may end up stop out, right? So then like Patrick, what Patrick do is also correct. So meaning that you want to put a little bit away from that too near. If you don't want to be too near, then it will be stop up very, very soon. So you want to be away from that line. So you put 1.68 also can. Okay, so then you enter at 1.74 and then you stop out at 1.68. So that will be how many cents? 6, 8, 9, 10, 11, 12, 13, 14, 6 cents. Okay, so it will be 6 cents. I'm calculating my reward to risk. So then if it's a 3-to-1, then this one has to be 1/8. Then only become 3, right? So then you calculate 1/8. So 1.74 plus 1/8 is how much? Okay. 1.74 plus 0.18 is 1.92. So 1.92 is a bit far, which is here. 1.92 is away. So then you have to see that the resistance is actually, these are the top. So then you see that actually the resistance are 1.92 is a bit far. So in order for you to enhance your chances of making money, right? You cannot put too far because that is away from the resistance, right? You have to be realistic. So at what price you want to put? Anybody? 1.86 or below 1.86? What will be your profit target? Below 1.86. Okay, let's say 1.85, right? So then we say, okay, 1.85. Okay, let's calculate 1.85. 1.85 minus 1.74. 11 cents. Okay, very, very fast. Thank you. Thank you, Patrick. 11 cents. So 11 divided by 6 is less than 2, right? 1.83. Yeah, 1.83. So then this 1.83 is not a very good reward to risk. Then I may want to I may not want to enter at 1.74. I may reduce to 1.72. I may want to have a limit order at 1.72. Okay, I change to 1.72. Okay, then, all right. Okay, so then my stop loss here will be, instead of 6 will be 4. So if it's 4, would it enhance my reward to risk? Is it better? 11 divided by 4, 2.75. Better, right? 2.75. Yeah. Okay. So because you know that you can't sell for too high, you cannot bluff yourself, right? You have to be realistic. You cannot sell for too high. So this is the more realistic price level that you may able to sell. So if let's say your profit target is so low, then you cannot enter at such a high price. Otherwise, it's not a good reward to risk ratio. It doesn't make sense for you to enter into this trade. So then you have to lower your entry price. Either you get it or you don't get it. It's okay, it's fine. You don't have to be too concerned about not getting the trade. You don't have to be too concerned, okay? So you just take it or leave it mindset. So it have to be fit to your rule. So your rule is that, let's say 2.75 is what you are comfortable with. Then you say that, okay, I will put instead of a market order, I'll put a limit order at 1.72. My stop loss is still at 1.68. And then my target is 11 cents away. So my reward to risk is 2.75. So if I'm happy, then I will enter the order. So then I will enter a limit buy order at 1.72. Then I will put a contingency after you got this, okay, or you can key in it directly. If let's say you have a contingency order, then you can immediately put a stop sell order at 1.68, and then you can put a limit sell order, okay, at 1.85. Okay, so then you can key in these three orders together at one shot. So make sure you key in stop sell order 1.68, then this is for your cut loss, and then you key in a limit sell order 1.85 point for your profit target, and then you enter a trade. So this trade, either you get it or you don't get it, because it is a limit order. So you may not ended up getting it, okay, if it didn't come down. All right. Okay. Anybody have any questions so far? You can enter all three orders simultaneously in the platform if, let's say, the platform allow you to do that. I know for the derivatives market, normally it's possible, okay? But however, for most of the equity platform, it's not possible, okay? So for most of the equity platform, if it's not possible, then what should you do? Then you have to do manually. So how is manually? Meaning that, okay, you key in the limit order now. Okay, you key in the limit order, and then you just wait for this 1.72, right? So once you get it, immediately you have to key in after you got it, okay? So it's only after you got it, then you have to key in a limit sell order. Okay, that means after you got this, then only you can key in a limit sell order, and then a limit stop order. Okay, so only after you got it. So if let's say your platform do not have a stop order, then too bad. Then you just have to limit sell whenever you see the price go down to 1.68, then you have to key in a limit sell order at 1.68. Okay, so meaning that you just have to monitor your screen carefully, and then you key in the orders manually. All right. So is it okay? Yeah. So meaning that we have to key in manually. All right. So let me do a recap again. So meaning that whenever you have a stop loss for a long position, make sure that you put the stop loss below the support. So in this case, the swing low is the support. Okay, and then if let's say you have a short position, the swing high here will be the resistance, and then that will be your stop loss level. So your stop loss will be away from the swing high here. Cannot be too close. Too close, you will stop out very, very fast. Okay, a bit away a bit. All right. Okay, let me go to the demo again. So let's go to the Inari. Okay, so let's say we are looking at this chart. Okay, so we are looking at this chart. So this is Inari. Now, if you look at this chart, right, can anybody tell me where is the swing high and swing low, the support and resistance? So in order to tell the immediate support and resistance, so you have to start from here, okay? So you see, you start from here, and then you look at the left-hand side. So the left-hand side will be this. Okay, so the highest point of the left-hand side. So the highest point of the left-hand side is this top here. So therefore, we can put a line there. So from here, you move, and then you see this is the highest point, you put a line. So therefore, this is your resistance. Okay. Then where is your support? From this point here, you move, and then it has to be lower than this point. So where is the point which is lower than this point? So this is not lower, right? So then where is the point? This point. This point is lower. So then you have to click yeah, here, this point. It's actually this point first, then only this point. Okay. And then only this point. So we go one by one. So this point first, then only 1.6. After 1.6, then only 1.45. Okay, so we can put a few support level here. Then we can put another here. Okay, so we can see that, okay, the immediate support actually was broken already yesterday. So yesterday broke the immediate support, then now it is going down. Okay, so therefore this is the immediate support, and then this is the immediate resistance. So if you to enter here, you can see that your reward to risk, is it okay? If let's say you enter here, this is let's say you want to sell slightly here, you want to sell at 2.2. Okay, you want to sell at 2.21, and then now it is 1.88. Okay, 2.21 minus 1.88 is 33 cents. Okay, I write here 0.33. Okay, so then this will be your profit, and then you look at your stop loss here. Your stop loss here is 1.68, and then you want to put somewhere below that, which is 1.63. Okay, you want to put at 1.63, or you want to put at 1.60. So you want to put at 1.63. Okay, so then you see 1.88 minus 1.63 is actually 25 cents, 0.25. Then your reward to risk is not so good. Okay, so therefore I need to adjust my entry price. So I need to adjust my entry price to what level? Because we know that this one is 1.63, right? So therefore, I want to reduce to 11, let's say. Because 11, then only I can have 3 times, right? So 11 means that 1.63 plus 11 cents will be 1.74. Okay, 1.74. So then it's not hope for rebound, it's lower down. Yeah. So then after calculation, then I find that 1.74 is a better entry price. So therefore, I can write here. Okay, enter at 1.74. Okay, let's say enter at 1.75 lah. Okay, then stop loss at 1.63. Okay, then my profit target, profit at 1.85. Okay, so you see this one makes sense or not, your reward to risk. Okay, let's see again. Okay, so from 1.63, 1.75 minus 1.63 is 12 cents. Okay, so this one is 12. And then 0.33, 0.75 is 1.85 minus 1.75. No, it's not good. Okay, so oh, sorry, it's not 1.83, it's 2.21. Sorry, 2.21. 2.21. Okay, so 2.21 minus 1.75 is 46 cents. Okay, so then I can actually lower down to a bit lower to 1.75 plus 0.33, 2.08. Okay, I can lower down to 2.08. Okay, I can take profit at 2.08, and I can still have this reward to risk ratio of about 3 times. Okay, so you see that I'm working backward now. Okay, I'm working backward so that I just want to fit into my risk as well as my reward. Okay, my target, my resistance here is I know that it won't pass through this level because this is the resistance. So therefore, I need to sell somewhere around here. Okay, and then my stop loss is somewhere below here. Okay, so therefore, I'm looking at my reward to risk is about 3 times. So if it's about 3 times, I think it's very comfortable. And then now the next thing is that you want to calculate your position sizing. So your position sizing is just now, let's say you have 20K, and then you are looking at 600 ringgit. Okay, 600 ringgit of the 20K is 3%. So 600 divided by your stop loss is 12 cents away. So meaning that okay, let me write here position sizing is equal to 600, okay, divided by your stop loss level is 12 cents. So it's equal to 5,000 shares. Okay, so meaning that you need to buy 5,000 shares of Inari. So let's say 5,000 shares times 1.75, that will be 8,750. Okay, so therefore, so your trade is equal to 78750. Okay, because you buy 1.75 times 5,000 shares, so it'd be 8750. Are you following? Okay, so will be 1.75 times 5,000 equal to, okay, that will be your trade. And then your stop loss is equal to 600. Okay, so this 600 is because of your 20,000, 20K times 3%. Okay, times 3%. Okay, so it's equal to 600. Okay, and then your potential profit is equal to 33 cents times 5,000 shares. So that will be your potential profit. 0.33 will be 1650. Okay, so this will be your reward to risk. So meaning that you will buy Inari at 8,750, and then you will sell when it reached 208, and then you make a profit of 1,650, and then you will stand to lose at 600. So you have everything in place. So then you are very sure, and then you are very confident of entering into a position. So if you were to lose, you will lose 600 ringgit. That's all. Okay, so that means that you are willing to cut loss at 600. You don't feel any pain. You don't feel the pain. You just cut loss, cut and go. Okay, and then you just lose that 600 ringgit. That's all. No regret, no painful. Okay, decide on the resistance level first before determining entry price. Yes, correct. So normally you have to see what is your resistance, and then before you enter into, you know that you have to enter a trade. Okay, so you know that you have to enter a trade, then you have to start to draw the resistance and the support. So the resistance and the support, that the way I'm showing you is to look at the immediate swing high and the immediate swing low. Okay, you look at the immediate swing high is here, and this is a resistance, and the immediate swing low is here, and this is a support. Okay, so you have this, all these are support. So therefore, you can put your stop loss below the support, and then you can take profit below this resistance as well. Okay, then you can measure whether it fit into your risk profile, and then it fit into your reward to risk, and if everything is fit, then only you can enter. So if let's say along the way you see that there is 120 MA line, okay, let's say we have another indicator is called the MA line. Okay, let me draw the moving average line. Okay, so I'm now drawing the moving average line. So this moving average line, I can see that the 200 MA line is up there, very, very far away. And the 100 MA line is here, okay? And then over here, I have two lines here. One is the 50-day, and then the other one is the 20-day MA line. So which means what? Which means that in order for my price to break through, there will be a hurdle, okay? So after I show you the MA line, right? Okay, do you think it's good to enter now? Or what is the chances of success? Is higher or lower now? Okay, just now we see everything, the picture is very, very good, right? So now, after I show you the resistance line, like the MA line, the chances of success is higher or lower? Can anybody tell me? What are the chances of success now? Higher or lower? With the lines showing to you. Okay, one says lower, correct. It's lower. Why? Resistance, correct. Okay, so if you were to look at my slides just now, I said that when we are looking at the resistance, not only we need to look at the swing high and the swing low, we have to look at the moving average line as well. Now with this moving average line in place, you see that currently it is facing some immediate resistance here. This is the 50 MA line. And then this is the 20 MA line. So the 20 MA line is the immediate resistance. So in order to see that it is bullish, you have to pass through that line. Okay, so which means that this trade, the chances of winning is there, but then it is lower by this MA line. Okay, so you have to find a trade whereby you will see that the MA lines are clear, the support and resistance are clear, then only you can see a trade. So it's not easy to find a trade, okay? Okay, so now, so you can see that when you are looking at a trade, right? It is trader, the difference between a trader and an investor is quite different. The trader is that you have to always calculating your risk, your stop loss. Whereas for investor, right, you don't have to, because you just buy and hold, no need to cut loss. Okay, so if let's say you have this phobia of cutting loss, right, then I would advise you not to trade, because you have your personality is not suitable for you to trade. You understand? So if let's say you are really not comfortable with cutting loss, then you really not suitable for trading, then you can go for the investment style. So meaning that you buy dividend stocks, you buy REITs, you buy value stocks, and then you just buy and hold them for a longer time. Okay, no need to think about cutting loss. Okay, if the price were to go down, the more is that you just buy in dip. You lower cost your average, and then you continue to hold. All right. Okay. So now let me cover the last part of this slides is the best practice. Okay. The best practice is that you set your time horizon first. Is this for day trading? Is it for 2 weeks, 3 weeks kind of thing? Okay, so your time horizon. After you do that, then you determine the amount of capital to invest. Okay, let's say you have this 20K. Then out of the 20K, 3%, okay, will be my loss per trade. Understand your risk preference, very, very important. And design the strategies that suit your personality. So do you notice that I always look at my own personality and then my own risk? Okay, when I look at the trade, I plan very carefully. I see what is the potential reward, what is the potential risk, and then I plan carefully, and then my entry price is also planned. Okay, so that means that you have to be very, very careful at each trade, because you look at trading as a business. You are doing a business, and then when you're doing a business, you have to make sure you make profit. Okay, so if this business deal is good, you go ahead. If this business deal no good, you just stop, and then you pass, and then you wait for the next round, because there are so many potential trade out there. You just wait for the best high, what I call is a grade A trade. Okay, you just have to wait for that grade A trade setup to come up. So once you have that grade A trade set up, the chances of winning is high, and then everything aligned, you enter. Okay, and then if you make money, you make money. If you lose money, you just cut loss, and then no emotion attached. Okay. Okay, so basic rules. So only take grade A trade setup and be patient. The right play will come. Do not trade for the sake of trading. And position sizing is a plan. And then set profit target and cut loss based on the support and resistance. And focus on the quality trades and not the money. The money will only follow when you follow the risk management. Okay, a lot of people, they cannot be successful. Okay, and that is because they do not have a proper risk management. And some of the common psychology trap is that fear of missing out. Okay, so this is the most common. A lot of people, they set their profit target too high, or or they do not set a stop loss, or all this fear of missing out. Okay, and then moving a stop loss further away as the price approaches. So let's say you want to cut loss at 7. Okay, and then when the price is approaching 7, right, you move your stop loss away. Okay, so that means that you are not following your rules. Regret. You feel bad if a stop is hit and then the price reverses, or target profit is hit when the price keep running. So sometimes when you stop loss at 7 and then it hit and then it reverses, okay, you feel very regretful. You said, "Aya, shouldn't have stop loss. I should have put it away." No, you cannot have this kind of a feeling. Okay, because if you have this kind of feeling, then you will never follow the rules. Overconfidence and complacency, not using the orders after a winning streak. Okay, so meaning that you are overconfident. Every time when you make a big gain, let's say you make a few thousand ringgit of a gain, then you become overconfident, and then you will, the next position sizing or the next trade, you probably will be ended up losing, and that is because you are overconfident, and then you are more risking, and then the trade B or trade C setup, you also want to take on. You get what I mean? Because you are overconfident, you think that you can repeat the winning again and again. So then even though you see that this trade setup is not so good, but still you wanted to go in. Okay, so then you lose money. Okay, so this one I have explained. Okay, so all right, now we come to the end part of it. All right, the 11:30 now. So let me do a recap quickly. So today, what have we learned? We have learned about doing a trade setup using a live demo. Okay, we have learned using a trade setup using a live demo, whereby I taught you how to calculate the position sizing. Okay, and then how to calculate your risk. So that is the first step. After you know how much money you are willing to lose, that you don't feel the pain, then only you start to calculate, and then you start to look at the trade, and then look for the trade A setup. So a trade A setup is where you want to see that there is no nearby resistance ahead of you. Okay, if there's some nearby resistance ahead of you, that means that these are very near resistance which is not suitable. So then you need to see a situation whereby the lines are all above or below. Okay, it's not near there. Okay, it has to be above here. If it coincide here, will be good. Then another thing is that you have to know the swing high, the immediate swing high and the immediate swing low for the support and resistance. Okay, so once you know the support and resistance, then you know that potentially this is the price. If it can break those resistance, this is the price that it may go. Okay, so then you will see that, okay, with the resistance and the support, then I have to calculate my 3-to-1 reward to risk. Okay, so my reward to risk is based on my cut loss. So my cut loss is actually this price. So then I key in there is 1.63. So then I adjust my reward to risk accordingly, and then I enter at a comfortable price. So this price at the moment is 1.89. It's not comfortable. If I were to enter at 1.89, it may not ended well because of my reward to risk, right? So I have to key in a lower price. If it didn't reach, then it didn't reach. I will just have to pass, and then I have to look for another trade. Okay. 200 or the 50, I would think that the 200 will be more. Okay, sometimes the longer the time frame, the more weight you have to imagine. The longer the time frame, the more weight it is, because the 200 MA line will be the one that is for a longer time frame, and then that is for long-term trend. Okay, so if you are able to pass that long-term trend, that is very powerful. Okay, and the 20-day MA line or the 50-day MA line, they are the short-term trend. So those trends are important as well, but it's for short-term trading. Okay, so it depends on what is your objective, but normally I look at the 200 MA line important, and then another line is the 20-day. So I look at these two, 220. Okay, so I don't want to look at too many lines, so I will bypass the 50 MA line. I will bypass the 100 MA line, because these two, sometimes if you have too many lines, it will confuse you. So you just stick to two lines, 20 and the 200. Okay, then yeah, okay, so any other questions? All right. Okay, so if no questions, I'll pass back to our moderator.
Thank you so much for that wonderful
Thanks.
insight, Ms. Pauline.
You have any slides to share? Your slide?
Yes, I mean, just a short one. All right. So again, thank you so much for that wonderful insight. And thank you for everyone who has participated in this session and taken your time this morning to join us. I hope you have acquired new and useful knowledge that you can bring forward to your investment knowledge in the future. Yeah. All right. Again, I would like to thank you all for this session.